Hello friends, and welcome to my video 20 stocks ranked from overvalued to undervalued. In this video I have compiled a bunch of stocks, 20 of them, in 5 categories ranging from overvalued to undervalued. Most of these stocks are actually from my portfolio, but it does have some additional stocks also, which I'm not sure. I have made videos on most of them on my channel. Go and check out if you're interested in any company specific. But there might be some that I have actually not made a video on that are kind of new to you, my regular viewers. These are actually companies that are on my watch list, some of them. So those will be some new companies I will present valuations on here. But for transparency reasons, I have highlighted, I will highlight all the stocks I own in my own portfolio to this video so that you get an idea of what do I own actually. Surprisingly, they will be in the undervalued category in my opinion, those stocks mainly. But I just released a video about my portfolio. That was my video before that. So if you're interested in what is in my portfolio and a little bit more in depth about the companies we are going to talk about next, some of them, go and check my portfolio video out. And if you're interested in specific of some company in my portfolio, you surely will find an in-depth video of that company at my channel Arctic Money. So go and search from there. Not too many videos there, I'm sure you will find it. But let's start this one with the ones that I perceive extremely overvalued in my opinion and move down to extremely undervalued. I don't have much of a script for this video, so bear with me as I freestyle here these stocks and talk about them, what comes to my mind in no specific order. And by the way, these stocks I'm going to present to you now are in no specific order there, so they just belong to that category. I'm not saying which one is higher up in category or lower in category, they are just in the same basket, let's say so. So let's begin with extremely overvalued, and first up, in my opinion, of the companies I have followed, I have made valuations on, Spotify, Tesla and Harvia are extremely overvalued at the moment, in my opinion. You have there 3, I would say, hype stocks. One from US, obviously Tesla, one from Sweden, Spotify, and one from Finland, my home country, Harvia. Now, I'm sure you know what Spotify and Tesla are, but for the ones not from Finland, Harvia makes saunas and stuff for spas and that kind of stuff, but mainly saunas. So very Finnish hype company there in my opinion. That stock price was way higher way back when craziness was going on in the market. It has crashed since but rebounded also. And what I actually want to say about, if you take a look at, I'm gonna put in these videos also the stock charts of these companies, but if you look at them, with these 3 I perceive extremely overvalued, you can see that they have been all quite hyped up stocks when the hyped up mania was at its worst 1 year, 2 years back. And they all somewhat present similar stories. I must say before, if there's someone watching this and getting really angry, I have to say all of these 3 make great products. Spotify is one I cannot live without. I listen to lots of music and podcasts myself, so I have been Spotify subscriber for a long time. The product is great, but I stopped researching Spotify a while back when I little bit saw critique of how the company, I'm not now completely sure how it went, but I remember someone criticizing that with Spotify's stock-based compensation, the company seems to be made for the employees of the company, not so much for investors. And they were, I think, making buybacks at huge valuations, which is obviously not wise for any company. And maybe I would need to actually revisit what I wrote back then, because I don't remember it so in specifically anymore, but the way Spotify was managed from the perspective of an investor, there was something I didn't like much, and that's when I kind of stopped following it. Nevertheless, the product itself is great. Of course, then you have Tesla. Great car too. I have nothing against Tesla cars. They are beautiful cars. And Harvia, I have in my own apartment, I have Harvia sauna myself. As I said, these are great products. Companies making great products, but their stock valuations, their stock prices are just grossly overvalued in my opinion. And this is an advice for the beginning investors, because I remember being a beginner once myself, and I thought that investing was about finding companies that make great products. Yeah, obviously it's good the company makes great product or service, but that's just the other side of the coin, and the other side of coin is obviously what am I paying for in this company, in its shares, what are the projected future cash flows this company can create for me. And yeah, it's just not enough to be a successful investor with knowing what company has a great product. You need to also have an idea about the price. That's kind of a theme I see with these three hyped up stocks that I have been following. They have all rebounded quite a lot recently. And let's wrap in the end a little bit of conclusion, but that tells me something about the markets we are living now, with these Spotify, Tesla and Harvia rebounding quite a lot during recent times. There was the extremely overvalued basket. Let's go to the overvalued. Here we have Berkshire Hathaway, Crocs, Microsoft, Starbucks and Meta. Again, these, or again and again, maybe not again compared, I wouldn't say probably that Harvia and Tesla are wide moat companies, maybe not, but these, especially Berkshire Hathaway, Microsoft, Starbucks and Meta are wide moat companies in my opinion, all except Crocs maybe on this list. And I would love to own these names someday in my portfolio. Meta I have owned. Actually Berkshire Hathaway I have owned in the past too. But I sold Meta recently, made nice profit with it. There actually, if you're more interested about that story, go and watch my portfolio video, the video I released before that. There I touch a little bit more on this, how I bought Meta and sold it already. But nevertheless, I think here we have a theme excluding Crocs. You have wide moat companies that I would love to own, but I'm guessing that I would need some kind of economic turmoil and lots of storms in the world economy and US economy to happen before these would fall to the prices I would be willing to pay for them. Berkshire Hathaway for me is especially intriguing if US market gets hit big time. I will definitely follow these companies if we enter in some kind of turmoil in the markets. These would be, they all are different kind of companies, but they, in my opinion, all except maybe Crocs have huge moats. So you would love to own one of these in your portfolio. But as said, in my opinion, prices are overvalued at the moment, so we'll keep on waiting. Then moving to the fairly valued basket. There we have Intel and Alphabet. Now, you might be wondering, as you can see, I own both of these in my portfolio. Why do I have them? Well, if I just touch on that really shortly, both of these companies, Intel and Alphabet, I perceive to have national security interest for the United States, which is one reason I like both of them. On top of that, Alphabet has a great balance sheet, flawless balance sheet, but I have been downsizing Alphabet when the price went a little bit up recently, and to be honest, I'm respecting Microsoft's Bing as a competitor for Alphabet search. I am not anymore sure how big of a moat in the end will Google have with their search business, or they will have moat, but how much can Bing hurt them and ChatGPT and such products, how much can they hurt Alphabet? This is something I'm struggling to understand, and that's why I got a little bit uncertain myself, and that's why I sold or trimmed down my Alphabet position. Still keeping it though because of their flawless balance sheet, because I think if there would be turmoil in the markets with balance sheets such as Alphabet, you would be able to probably buy out some promising companies and bring them under Alphabet. Maybe. I don't know, but yeah, that's the reason why I own Alphabet mostly. Then Intel. Obviously, I have said this in my videos prior, but Intel is an important semiconductor company, and the one that is leaning towards West. And if there would be something bad happening in Asia, I believe Intel's value would go up instantly, because chips market is very heavily concentrated in Asia, and something happening there might be, unfortunately, I'm not hoping anything bad for happen, obviously, but the people who have seen my portfolio video know that my biggest position is Alibaba from China, and if something would happen in Chinese market, Alibaba would crash, worst case go to zero, and this is kind of a hedge bet from me. I hope I never need to use that hedge, but I have it in my portfolio because as an investor you need to be ready for anything. Yeah, on the valuation perspective, I think Intel is fairly valued, might be even overvalued at the moment, just a little bit. So basically I should sell it, but it has a specific role in my portfolio as I just described to you. And yeah, hoping just that I will never need to see that hedge being used and the world doesn't go crazy. You know what I mean in relation to China. And yeah, as said, one reason what I look for in companies is how important they are for national interest of, in this case, their home country, United States. And I think both of these have a role in as a national security interest in USA, so that kind of is part of a moat to me as an investor, I believe. So one small thing that is common for both of these two. And then we moved to the undervalued basket, which, surprise, surprise, has lots of my holdings from my portfolio, as you can see there on the screen. Just quickly, Sprott Physical, well, let's see what we have here actually. Well, yeah, let me just quickly go through. Sprott Physical Uranium Trust, that's physical uranium, obviously. Alibaba, we all know Alibaba. Flow Traders, a liquidity provider. Carriage Services, a funeral home cemetery operator business. Tyson Foods, biggest meat company in US market. Eurofins, laboratory services worldwide. We all know Disney. And then Amsterdam Commodities, which is spices, selling spices, European company. Maybe for the ones you can see in my portfolio, go and check my recent portfolio video and I will talk a little bit more about those companies. So I won't waste anybody's time now here repeating my rationale for owning these. Let's touch on Disney, which in my opinion is a wide moat company with the world's most loved brands, which enable many kinds of scaling to be done through different platforms of Disney, which is obviously something I like very much. The amusement parks of Disney are wide moat businesses, but for me, the deal breaker why Disney is not in my portfolio, it has been in my portfolio. I have owned it when Corona started. At those times I owned Disney and made good money with it actually, kind of like Meta a while back. But yeah, the deal breaker with Disney for me is the streaming wars at the moment, which is very ugly to watch. Remains so unclear to see which streaming service, or rather services, come on top and win there, if any win. There has been made comparisons to airlines industry, which is terrible industry to invest in, that streaming companies might be in similar situation where it is really hard for anyone to make profit because the competition is so fierce. I would love to own Disney, but I need to see some scandal hitting Disney or market more broadly to own it because of the streaming situation. Disney Plus, good service, but to be honest, I don't have enough information myself on who is going to actually win there in the streaming wars. Otherwise than that, when Disney Plus started, I wanted to invest in Disney, and that was the reason behind my profits back then. But now there's so much competition. That's what's keeping me from owning Disney, to be honest. Yeah, Amsterdam Commodities, which I already told you, is a company selling spices and other stuff. I have been trying to make a valuation on this one, but it seems that it's undervalued at the moment, a little bit at least. But I need to do a little bit more research on that one myself. That's a new company I'm following, so a little bit uncertainty there. I'm not gonna say anything more. But yeah, seems undervalued at the first glance I did. And then we move down to extremely undervalued, and yeah, I have these two both in my portfolio, GEO Group and CoreCivic, private present operators in United States. They are my asset plays with good amount of risk and ethical problems for some people to invest in these companies, but usually value is found where other people don't want to go, and this definitely is one of those industries. The ethical side I have also touched in my previous videos, so let's not talk about that here. Go and watch my videos on these two. I think I have made even more than one video about these companies, this industry, so go and watch those. These are risky plays, but I see limited downside with them and big upside myself. I believe they trade under their liquidation value currently. They are cigar butt type of stocks and cigar butt type of investing plays here. But of course, as the industry is what it is, there is lots of risk around them. To me, it seems that they are trading under liquidation value, which makes me think that the downside is very limited. I really cannot lose much in these two, with investing in these two, but I see upside potential if government needs their assets, and this upside may come in the form of government buying their assets, or then they are just allowed to keep operating as they have the past years, even though Democrats have stated out loud that they want to shut them down, but they haven't shut them down yet, and there might be reasons why they cannot shut them down. So yeah, these fall in the extremely undervalued category in my valuations, but as said many times, if you want to invest in these two, they carry lots of risk there, so they are risky investments too. Alright, there we had it. Let's wrap up a broader picture now here of what I think I can see myself, and the main takeaway from my valuations basically. What I see, well, this is again guessing, so much guessing when you talk about the macro picture. I like to talk about companies, the micro picture more than macro, but I believe overall that Standard & Poor's 500 is very overvalued at the moment. Taking into account my own research and the work of other good people I follow, I believe Standard & Poor's 500 has ballooned on the trend of ETF investing, and some really hyped up names we all know. And the hyped up market is back again from Corona times, as it seems. First it was electronic vehicles, now it's AI obviously. What is going to happen next? Yeah, I get it. Electronic vehicles, artificial intelligence especially are world-changing innovations, but guess what? So was internet back in the days. And many people invested in those hyped up internet names, and those internet names ended up going bankrupt, and investors ended up losing all their money, putting their money on this new hyped up thing called internet. My only advice is that when you chase the next internet, the next EV stock, the next Nvidia, that is now the hyped up stock, you need to have sensible valuation of what this company is actually worth, what is its total addressable market, and how big are the where are the limits, how big it can grow even logically. May heavens help those people whose only argument in investing in Nvidia is that AI will change the world. This is exactly what I said in the beginning of the video, that it's not enough that you spot a great product or great service in the market and want to invest in that. That's not enough. You need to know what price the company, the stock is selling to. There are so bad examples. One that comes to mind is the industry I'm working myself, food industry. I could throw you names, Beyond Meat and Oatly as companies. Go and have a look at those stock prices. What it means that basically you have great innovation, great new product, good product, whatever, but if it's priced priced sky high and there is no logic in what you need to pay for it. Bad things happen to those investors, and go and have a look at the stock price when they IPO'd. What happened to the investors then? That's not good. But luckily, I learned pretty quickly 6 years ago, 5 years ago, when I started my investing career, that yep, it is not enough to have great products and services. You also need to be able to understand the price, and then you can talk yourself that you're an investor now. US market and Standard & Poor's 500 has had a bigger bull market than ever before during the last 15 years, and yes, unarguably, you would have done amazingly well in investing only in Standard & Poor's 500 or Nasdaq ETFs. But will the next 15 years be the same as the last? That's my question to you. Myself, I doubt that. I think better value is already now somewhere else than in big tech or top names of the S&P 500. Let me know what you think about this. Tell a friend too about this video and Arctic Money channel here, and I will see you in the next video. Bye bye and have a good summer. Bye.